explain this. How are we going to see a bigger gap between these stocks moving forward?
Hey, Contessa. So really two forces are reshaping the Mag 7 trade heading into 2026. The first, the market is punishing big AI spenders without clear returns. Yardeni Research, after 15 years overweight mega cap tech, is telling clients to cut Mag 7 exposure, citing capex and talent costs, squeezing margins, and slowing earnings. Hyperscalers have issued $121 billion in new debt this year, 4 times the 5-year average, a sign that the build-out is outrunning internally generated cash. Now, that's part of why Amazon and Meta sit in the laggard camp. Meta pouring tens of billions into data centers and AI hires, but its AI model, Llama, only has about a 10% share of the enterprise market, which is where the real AI dollars and margins are. Anthropic and Google dominate that spend. And without a cloud business, the payback story is basically ads. Now, the second force is model convergence. If the gap between models keeps narrowing, and it is, distribution matters more than who trained the best model. You see that in the scoreboard. Alphabet is up 65%, leading the pack because it owns the full stack: chips, cloud, distribution, and the top-performing AI model. And it's not even getting credit for Waymo, now live in 5 cities with plans for 20 more, fully autonomous, no safety drivers. Compare that to Tesla, a 320 forward PE. That's about 10 times Alphabet. The bulls see a $1 trillion robotaxi opportunity, even though Waymo is way ahead. And then there's Apple, the wild card here, near the bottom at this point, but it never plays first mover. If models converge, distribution wins, and Apple has 2.3 billion active devices. Contessa?
So this is an interesting scenario. What you're saying is Google, because it owns the whole stack and delivers it right to the consumer, is set up to be in the starting position. You would think that Microsoft, as it's on our computers at work and all of the like, is similarly situated. Is it possible that Apple has the rest of the stack and just hasn't shown us all its cards?
Well, on your first point about Microsoft, the two places where it's lagging Google's strategy is on chips and having its own competitive in-house LLM. So it has Maya, which is this effort at in-house silicon, but it's not competitive in the way that the TPU is. And they also have just been relying mostly on OpenAI's models, newly in partnership with Anthropic. Now, to your latter point about Apple, kind of coming into the game a little bit later, there's a report that they might be teaming up with Google using Gemini as part of their Apple Intelligence rebrand in 2026, and that's really what people have been waiting for. And they haven't been playing this hyperscaler spending game. They only put in $3 billion in terms of infrastructure spend in the most recent quarter. So they're not trying to win on that front. They don't have a cloud business, but they sure do have distribution nailed down. And that could be where they become a very competitive force in 2026.
Why do you think that investors are beginning to lose patience with the amount of money, the amount of debt that is concerning AI and data centers and the investments here versus the payoff? I mean, it's so big and there's so much speculation about this time it really is different. Why the rush to see those profits?
Part of the problem has to do with a reliance on single customers. So Oracle has really become the poster child for why debt might be problematic. And that has to do with the fact that the vast majority of its backlog comes from a deal with OpenAI to the tune of $300 billion. And so they are committing to this kind of infrastructure build out before any of this capacity comes online and before OpenAI has paid its bill. And we're also seeing similar numbers show up in backlog for Microsoft, for example. As part of its reorg with OpenAI, renegotiating the terms of their commercial partnership, they get $300 billion worth of committed spend from OpenAI to Microsoft Azure. But the concern is that OpenAI is committing to a lot of different partners, north of $1.4 trillion in compute commitments, and it doesn't have either the revenue or the next round set up to be able to facilitate that spend. And they also haven't lined up their debt to be able to pay these compute bills.